begin our economic mechanics with the US dollar. And I did an update Thursday and showed that the US dollar had turned around, and we see here on point 1 that the stochastics here are positive. They crossed earlier in the week, gave us a positive indication, bouncing off of that 76 line. So we gave this chart a green mark to start things off on the US dollar. And a look on the daily chart at the MACDs and the histogram. We see that the MACDs are positive, and the histogram bars, they're above zero now, so that's bullish. We gave this chart a green mark. And up top, the relative strength index shows that it's been rising a little bit off of support, so looks positive, but there's a little bit of resistance up ahead, so we're going to be a little cautious, so we gave this one a yellow mark. And the weekly chart of the US dollar shows us on point 1 that the stochastics, they're still negative and declining, so we had to give this one a red mark. And a look at the MACDs and the histogram bars shows us that they're still in decline, so we had to give this one a red mark as they're still negative. And up top, the relative strength index shows us that it's trying to turn back up, so we gave this one a yellow mark. And overall for the US dollar, we analyzed the daily charts and the weekly charts, and on the daily charts we found the stochastics and the MACDs were positive, so we gave those a green mark. Relative strength hasn't turned around yet, so we issued a little caution and gave that one a yellow mark. And on a weekly chart, stochastics and the MACDs there, they were still negative and declining, so we gave those a red mark. And the relative strength index up on top of the weekly chart showed us that they were starting to gain some positive momentum, but we're going to be a little cautious there, so we gave that a yellow mark. Overall for the US dollar, we had 2 red marks, 2 yellow marks, and 2 green marks. Take a look now at the commodities, represented by the CRB Index. A look at the daily chart of the commodities shows us that the stochastics are in serious decline right now, and they're from overbought territory. They're negative. We gave it a red mark. This is important because it's coinciding with the upturn in the US dollar, and we know that the US dollar and the commodities move in opposite directions as commodities are priced in dollars. And a look at the MACDs and the histogram bars shows us that they just turned negative and gave us a bearish signal, so we gave this one a red mark too. And a look up top at the relative strength index shows us that that's declining too from overbought territory, so we're losing strength there. We had to give this one a red mark as well. And a look at the stochastics on the weekly chart shows us that we've been in overbought territory for quite some time, and we're just getting a bearish signal now, so we issued a little caution, gave this one a yellow mark. We see up top too, we've got the solid blue line. There's where we've got some resistance. Been pointing that out for the past couple of weeks. I don't think we're going to get there on this run, as I think we're going to have a pullback in the commodities first, but I think eventually we'll get there as commodities have a bright outlook. And a look at the MACDs and the histogram bars shows us that we're losing a little bit of steam here. They're slipping a bit, but they are still positive. So we give this one a yellow mark here too. We're going to look at this one with a little caution. And up top, the relative strength index has been slipping a bit too, and it's falling below the 80 line, so we gave this one a yellow mark. And so, summing things up for the commodities, we analyzed the daily charts and the weekly charts. We were split on this one. Down on our daily charts, we found that the stochastics, the MACDs, and the relative strength index were all negative, so we gave them all a red mark. And over on the weekly charts, we saw that the stochastics, the MACDs, and the relative strength index were all neutral, so we gave them yellow marks. Shows us that the commodities are slipping a little bit here, and we're going to issue a little caution and be neutral on them. Wouldn't be putting new money into commodities quite yet, but if you got a healthy profit, you might want to consider taking some profits, or else hold on. And we look now at the 10-year Treasury yields. Point 1 on the daily chart shows us stochastics are negative. They're falling. They got a little way to go before they're oversold, so we're definitely going to give this one a red mark. And a look at the MACDs and histogram bars shows us that they're falling too, and they're both negative, so we gave this one a red mark. Up top, the relative strength index shows that it may be gaining some support at this level here, so we gave this one a yellow mark. Issued a little caution here. And point 1 shows us that the stochastics on the weekly chart look real bad. They're in overbought territory, giving us bearish signals. Looks like we got a way to go on Treasuries here, that we could fall down to that 20 level and take some time here. And interest rates would be going down if that happens, so that means that money is flowing into bonds. I don't know who would be wanting to buy Treasuries at this time beside the Federal Reserve, but my understanding is they're buying about 70% of the Treasuries as of now, so can't imagine how much more they would buy. And the MACDs and the histogram, they're still in positive territory, but they don't look good. They look like they're about to confirm the move in the stochastics. black line and the red line are starting to converge on each other here on the MACDs. Histogram bars are very close to that zero level where we're going to get a bearish signal. Again, I don't know who's going to be buying these treasuries, but it looks like money is going to be flowing into treasuries as interest rates look like they're headed lower. And up top, the relative strength index doesn't look too good either. It's been overbought and it's falling too now, so we gave this one a red mark. And so summing things up for the 10-year Treasury yields, we analyzed daily charts and the weekly charts. On the daily charts, we found the stochastics and the MACDs were both negative, so we gave those a red mark. Relative strength index was still neutral, so we gave that a yellow mark. Over on the weekly chart, stochastics were indicating a negative outlook, so we gave that one a red mark. MACDs were still neutral but slipping, so we gave that a yellow mark. Relative strength index was negative and falling, so we gave that one a red mark. And overall, on the 10-year Treasury yields, we had 4 red marks and 2 yellow marks with 0 green marks. Again, that means that interest rates are falling and money is flowing into bonds. And let's take a look at the Dow Jones Industrial Average. And chart 1 of the Dow Jones Industrial Average shows us that the stochastics, they turned negative again and continue to drop. They were turning positive, trying to make a move higher, but slipped a bit during this week, so we gave this chart a red mark. Point 2 shows us that we're still intact with the upward trend line, that blue line there. Wouldn't be surprised to see a move down to that 11,500 level. It would mean that we're still in an upward trend, so nothing to worry about until we start slipping below that. And a look at the MACDs and the histogram bars shows us that back in February we gave a sell signal and we've been slipping ever since. We gave this one a red mark here, so there's no sign of recovery here in the MACDs or the histogram bars. Looks like we've got a little ways to go. Nothing impressive up on top with the relative strength index as it's slipping further. Nothing looks good here, so we gave this one a red mark. And this is a chart that concerns me here. The weekly chart, we see the stochastics, point 1, are falling from overbought territory. They've got a long way to go before they can be oversold, so I don't know if we hit a peak here. I had a target of 12,700 on a Dow. Doesn't look like we're going to quite make it there, at least on this run, and it looks like we're going to continue significantly lower. I'm thinking somewhere around that 11.5 level was probably where we're going to settle. MACDs and the histogram bars are nearing confirmation of the stochastics. They're still positive. They are declining. We had to give this one a yellow mark as they are still positive, but it doesn't look good from here. And up top, the relative strength index is falling, so we gave this one a red mark. It's negative, and it doesn't look like it's going to catch any support anytime soon. And so summing things up for the Dow Jones Industrial Average, we analyzed daily charts and the weekly charts. On the daily charts, didn't look good. We got stochastics, the MACDs, and the relative strength index, all negative, so we gave them a red mark. Over on the weekly charts, stochastics were negative, so we gave that a red mark, but the MACDs, they were still neutral, so we gave that a yellow mark. Relative strength index wasn't looking good, so we gave that a red mark. I think it's only a matter of time for those MACDs, they slip below that zero line and give us a sell signal, and they turn negative too. Looks like we're going to be selling in the Dow Jones right now. It's been real tough trying to find some stocks. Over in the IBD portfolio, we've been escaping all the treachery, but this week kind of caught up with us, as you'll see here in a bit. And so we've been analyzing the US dollar, the commodities, 10-year Treasury yields, and Dow Jones Industrial Average, looking for where the strength is and where the weakness is. We did this by establishing a score by weighing the number of positives against the number of negatives and coming to a logical conclusion that way. This week, coming up, number 1 was the US dollar. We had 2 green marks, 2 yellow marks, and 2 red marks. Coming in number 2 and slipping quite a bit is the commodities. We got 3 red marks, 3 yellow marks, and 0 green marks there. 10-year Treasury yields, they came in second as we see that we had 0 green marks, 2 yellow marks, and 4 red marks. That means that the 10-year bond is doing really well, the 10-year Treasury bond that is. And the Dow Jones Industrial Average came in last place as it's been slipping and been very volatile lately. We see that we've got 5 red marks, 1 yellow mark, and 0 green marks. Now, a lot of articles, a lot of people are saying that this doesn't mean anything because there's no volume in the sell-off here, but my concern is when the volume does start, what are we going to see then? That concerns me. And taking a look now at our market gauge, the object here is to be as far in the right column in the positive territory as possible, and as far away from the negative column in the left as possible. And we see that the US dollar came in first place this week, so we put that one between neutral and positive as it's trying to make its way into positive territory, and I think we're going to see just that. Commodities, they slipped an awful lot. They were real positive last week, and now we see that we're bordering between negative and neutral right now and falling as we see the dollar gaining strength. 10-year Treasury yield is moving in the same direction as the commodities. They're real close to each other, as they should be. And we see in last place the Dow Jones Industrial Average. That's selling off right now, and it looks like the money from there is going into the Treasuries. And coming up next, it's the IBD portfolio. Oh, you're not going to want to miss that one. Most exciting week yet, I guarantee it.